Giles, you and I are in blue jeans, and that means it is Friday, and it's the Friday of a terrible week for financial markets, in stocks, in bonds, in bank stocks, all across the world. And it's been a terrible month for financial markets. So the question of the hour is, when you have a bear market, does that lead to a recession?
Good news is no. I mean, we've had these kind of alarms being played by the equity markets several times in the last few years. Generally, the economy just shrugs it off. All it does is generate lots of revenue for equity traders and lots of headline for newspaper makers. That said, you would expect the financial markets in some way to be rational. And when they go down, they're telling you something about the future isn't as good as they thought it was before.
And there are some anxieties out there.
Sure.
Earnings growth has not been great on the S&P 500, for example. China's economy starts to be slowing. In theory, the markets are responding to real facts.
Yeah, exactly. And that's what you want them to do. You wouldn't want them to carry on going up when things are not going so well there. It's just giving a worse deal for the investor. Right. But you look through history and look at previous episodes where the market's kind of done this sort of thing. Most of the time, something or other has turned it around. And it's either the authorities or the market just rights itself. I mean, if we can look back through history at some of the other ones, the one I always remember from when I was a young trader in 1998, everybody was worried about 30 days after the peak. It was already down almost 20%. They said, here's a bear market.
And the blue line perks up nicely quite soon.
It goes up beautifully after that, all the way into the dot-com rise and beyond that. And the real economy was fantastic. So in came the Fed to deal with a couple of local difficulties with hedge funds. And it's all over. Likewise, the most famous one of all, 1987, down 20% in one day, diddled around for the rest of the year and so forth. The economy was fine.
Then, of course, though, there is that very frightening-looking yellow line. 2008.
That's the scary one. And what everyone remembers about that, of course, is it's banks. Banks are also part of the story now. Look at the purple line, which is today. We're kind of tracking that orange line.
Yes.
And it's in about a month or two's time we find out whether it turns into something worse or it's going to be fixed. The important thing to remember is at each of those other happy episodes, it was the Fed that came in. The Fed said, you know what, you may be saying you're thinking there's going to be a recession. We don't think there's going to be one, and this is what we're going to do about it. That's what's worrying everybody right now.
Thanks, Giles.
Thank you.